You're tuned in to the K-State Radio Network and Agriculture Today. Thanks for joining us once more. Remarkable times in the grain markets, easily said. And we're going to talk about what's going on there and what that means to you producers and your marketing plans now with Dan O'Brien, grain market economist, K-State Research and Extension, and spending time just looking at the futures trades. Yesterday, a phenomenal day on all fronts, Dan.
Well, to just look at where we're at tells quite a story on the markets. So, uh, no, May 21 corn closed yesterday at $6.50, and we in that contract last fall at harvest we were around literally in October we were around 375 or so. So we've almost doubled that, and of course factors that led to that had a lot to do with what's happened in China with their ongoing demand pull, and as that's come into the market, other users trying to make sure they have adequate supplies. It's really interesting to me to see that from that harvest number of 375, we got up to about 550 and spent a lot of time there, kind of a hesitancy to move beyond it. And now within the last bit of time here with ongoing demand, exports going pretty well, and again, demand pull, no fall off in the ethanol livestock feeding sectors here in our country. Here we've added basically $1 to that 550 area, and that's happened basically from late March. Well, a lot of that's happened here in as we've got into April. So just interesting, and we can talk later about what that type of a situation tells us, or what that signals us, I guess, heading now into planting season. Well, it's planting season started, and as we kind of move through the stages of crop development here into planting, we'd hope by the first, May 1 to May 15th, thereabouts for corn, and then moving into sorghum and soybeans. Although we've heard about things being moved up even for those crops, when price uncertainty, acreage uncertainty might work itself out for these crops. It just seems that for corn and for sorghum, that being the first crops out, if we get the crop in the ground and lots of moisture and everything looks good, well, then you still have uncertainty that will hold things up. You probably would guess, given all that's happening now with supply and demand factors, into June and on into July. But any risk to the crop just brings us pretty interesting volatility. And new crop futures closed yesterday for corn at 553.5. So what had been when the front end month was at 550, we had remember the new crop bids were trailing by about 70-80 cents. Well, now the new crop futures bid is where the old crop one used to be before we had this run up of $1. and the spread is now $1, and it was 70 between new and old. So interesting to see for sure.
Dan, it's worthwhile to ask who's buying the corn, and you've gone over the latest reports on that. What do they say?
Well, in terms of other countries involved that are buying, number one buyer with 10 million metric tons, and that's accumulated shipments with what's the outstanding sales of 13 some on top of that would be China, and then second most active country that's involved there would be Mexico, 8.8, but it's basically 8.9 million metric tons with 4.4 bought ahead. Japan coming in at 6.2.5 million metric tons shipments, 3.2 bought ahead, and a number of other countries that are pretty active. Colombia is surprisingly strong. Just a good number of other countries, Taiwan in there, Honduras, Nicaragua, Panama, Peru, all of these having a hand in basically wanting to secure supplies. So just very, very interesting. Some of that South America activity is probably due to worries about the second crop corn, second corn crop coming in Brazil, and weather reports we see, and you and I were talking about this before our program, Eric. For the USDA's international weather report, it says the headline is dry weather dominated large sections of Brazil, and that's this is prime time for that corn crop. If anything, heavy rains down in Argentina, and that can be good and bad depending on which crops are coming in and going out. So.
And on the grain sorghum side, the grain sorghum export story is virtually all China, you say?
95% plus China, and the issue is they have vast needs, and so here we go. We have the grain sorghum market as a surprise to no one, very, very dependent. And gosh, the shipments that happened 2 weeks ago, the week ending, it would have been April 8th, and then again this week are tremendous, especially the week of the 8th, 33 some million bushels, followed up this week with 10 million bushels. And we need a pace of about 4 or 5 to meet the USDA's projection. So we're even watching ahead into the next marketing years for corn and grain sorghum. And here you do have, for corn, it's interesting that China has not been really active in purchasing into the next year, but who has been active primarily would be, Mexico for sure, and that followed by Japan. So it just interesting to see who's buying this year and then who's buying next year. And on grain sorghum, you've got the only country that's been out there active, and it's not in any small way really, is China, and they've been buying into the next marketing year too.
Talking wheat for a moment here, wheat futures experienced a fall off back in March, but as per the latest action there's been a virtual full recovery from that drop.
Yeah, and I guess the pattern was that in February we'd gotten up to about 660, and then much to the bemoaning of people with wheat to sell in Kansas and elsewhere, we dropped down basically $1 to about just above 550. And now with what's happened in the last 2 weeks, we've regained all of that back and closed yesterday at 667 and a half. So what's driving that? Well, there's wheat freeze issues in Europe. Big issue. You've got uncertainty, not so much of production, but just political stability over in between Ukraine and Russia and the Black Sea region, troops massing on the border and all that. So that doesn't seem to be going anywhere yet. But geopolitical issues are big, just as if China and Taiwan got into a scuffle. Well, that upsets the geopolitical balance and the flow of goods. And so anyway, hasn't happened yet. Hopefully it doesn't. But so anyway, you got that. The actual shipments of wheat still continue this pattern of trailing behind what we need to actually meet the USDA's projection. And that's been an ongoing chronic issue. So we don't have bad wheat export numbers, but the actual pace of where we end up at, and instead of hitting USDA's target, you wonder, are we going to hit about 1 million bushels, 100 million bushels below that? So it's just kind of an oddity that's out there. I would say that and maybe it's just a Kansas thing, but all that's going on in the feed grain markets, almost no grain sorghum heading into domestic feeding, not much, and corn scarce to get. We still wonder about wheat feeding. That'll have to happen out here in the Western Plains, and so in both wheat and in corn, you've got the market traders questioning whether the USDA's numbers are representing the tightness of ending stocks that the market seems to be behaving according to. This isn't a docile 1.35 billion bushel carryout that's being represented for corn, or 850 million bushels for a sorghum. It's behaving like it's way tighter than that. So stay tuned. I guess we'll see how it all plays out at the end.
And $15 soybeans on the board this week. Who would have thunk it?
We didn't break $10 in the soybean market for the May contract anyway, May 21 contract. until basically September, October of last year. And since then we've gained, we're up to 1533 and as a close yesterday, and pretty similar for the sorghum, for the soybean market as it was for corn, in that we'd went from basically in September around $10 up to by late December, early January, got up to about 14, and that's a tremendous price historically, and traded in a range about 1350 to 1450, and now within the last several days jumped up above that range up to 1532, and we're kind of balancing the end of our marketing year with what's coming out of Brazil hitting the market. And so our weekly pace is just so, but we're not really, nobody's anticipating that we won't hit the USDA's projection, which had been raised once or twice on the way there to 2.28 billion bushels. What's interesting to me is that we have buying already going on out into the next marketing year, and most of that, again, 2.8 million metric tons of that is China. So China's aggressive buyer of 35 million metric tons of this year actual shipments, and actually when you look at where their outstanding sales are, most of them are, the majority of them are out in the next marketing year. So what's that say for the soybean market? It means that they're probably going to Brazil and Argentina right now, but they're anticipating when that's done that they'll have to come back here, and they're already buying ahead to do it. And you've got some other players, Mexico, Pakistan, surprisingly, Indonesia, Bangladesh, Netherlands, and Taiwan, all having, say, about 2 million metric tons bought, but 2.8, 2.9 million metric tons, all coming out of China. So it doesn't look like buyers from China are looking to vacate the U.S. soybean market once we get out into the harvest time. Some of them are already, basically 10% of the USDA's projections already out there, and we're basically 19 weeks away from the start of that next marketing year. So a lot of underlying demand. They're all going forward.
All of this going on, and we're barely, Dan, into the production season, just at the very start. So what does that suggest about the potential for volatile times in these trades moving right through the summer?
Well, as we talked about with the feed grains, any threat to these spring planted crops, and wheat also, but spring planted crops especially, is going to have an exacerbated response. So again, our focus right now is on demand driving these things, driving these situations. U.S. demand, what's coming to the U.S. for demand, but this whole debate we've been having about what acres are or should be or might end up at for corn, for soybeans, for sorghum, for spring wheat, all the above are all at play. And with that, throw in freezing temperatures down in the central and southern plains that might cut back harvested acres for wheat some, and it just roils things up all that much more. And we don't want to forget that maybe last thing I'd say is that, you're at a time now when you come into delivery periods for these contracts that people can take long positions and demand delivery and force someone else to go scramble to find cash grain. So maybe right now in a time like this, it really probably behooves our folks to be thinking about, to know when these delivery periods are, when people are trying to avoid getting ran over by a train coming into them. In terms of being forced to buy grain to fill a contract. So I think it sounds like some of what's happening right now in these days with this big run up is people getting ready for the delivery period to commence for the May contract, and not wanting to be in position to have to go scramble and find cash grain someplace or to get title to it anyway to deliver. And so that explains, I think, some of what's going on right now. Like, again, people tight supplies, wanting the futures market to help them gather in those supplies.
Well, we're enjoying watching this unfurl for sure, given that it's to the upside. And
And as long as we don't have a short position in the futures, we're
right,
enjoying it.
right.
That would be the reality of it.
Important caveat, indeed. Thanks for the comments, Dan. And next week we'll get together once again.
Thanks, Eric.
He joins us each Friday to talk grain markets, does grain market economist Dan O'Brien, K-State Research and Extension. And we'll be back on Agriculture Today.